Mm-hmm. ब्लैक वाला कल देख लीजिए, कल देख लेना, ठीक है। बुक्स लाया था ना सब लोग? कल हमने इंट्रोडक्शन क्लास देखा है। टोटल कितना चैप्टर्स है एक बार देख लो, इंडेक्स देख लो सब लोग फास्ट। 5 chapters, yes, 5 chapters. I forgot your name, your names. Ankita, okay. Megha, Prantiki. 5 chapters, each chapter carries 10 marks, yes? Okay. Section A, I mean the 50 marks, corporate accounting, 50 marks auditing, yeah? 5 chapters. What is the first chapter? Accounting for shares and debentures. So first of all, what is corporate? We have discussed yesterday. Kashyap, what is corporate? Company. Corporate is nothing but company. Company. Company, बड़ा building देखा होगा, हाँ? Company. So what is a company? When group of people come together to form a business, it is called a company. Sir, in case of sole proprietorship, you have how many members? Single person. Single person is the owner? Yes. In case of partnership firm, 2 or more, minimum 2 persons, yes. Sir, in case of company, how many people? Huh? Yes, more than 2. I'll come to that number later on. First of all, see what is company. Okay. Group of people coming together to carry on any business. Yes, Ankita? Huh? Company is derived from the Latin word cum. Cum is nothing but together, with or together. Pennies is nothing but bread. Okay, bread. So together you are doing business, you can earn some livelihood or bread for yourself. That is called company. Clear? These are all the characteristics of a company. What are all the characteristics of a company? See the characteristics. Membership. In case of a company, who are the owners? Not board of directors, shareholders. Shareholders. Who are the owners? Sir, what is the difference? Shareholders, they are going to invest in the company. They buy shares. Yes? Yes? They are the shareholders. Shareholders cannot do the business. They'll appoint someone to carry out the business on their behalf. Yes? So they are called board of directors. Okay? They are called board of directors. Membership in the sense shareholders. Okay? Shareholders are the members. Incorporated association. Incorporation in the sense starting, formation of a company. It is called incorporation. Sir, how do a company incorporate? Promoters, we have promoters in the sense, straight away in the company, we don't have shareholders. First, someone, say for example, you 3 people. These 3 people, yes, they decided to form a company. These 3 are called promoters. Okay, they'll go to the ROC. What is ROC? Register of companies. Okay, register of companies. Yes, say something like a municipal office. For example, you want to build a house, you will go to the municipal office, you take some permission, yes. Similarly, to start a company, person has to go to the ROC, yes. Who will go? Shareholders cannot come on the first day itself, yes or no? Because there is no company on itself, yes. To start a company, there has to be some persons who are called promoters. Who are they? Promoters, okay, promoters. They'll incorporate this, okay, and then separate legal existence. This coincides with separate legal entity concept. Yes, company is different, shareholders are different. Yes, perpetual succession. Any idea about perpetual succession? Yes, very good, Mohit, very good. Perpetual succession. Members or shareholders may come and go, yes, but the company stays still for many years. Even if the shareholder dies, their legal heirs come, yes, their legal heirs come, but the company stays still, yes. Common seal. Company cannot sign on itself. I mean, by itself it cannot sign, yes or no? So they create one seal, example stamp, similar to stamp. Okay, wherever you find this common seal, indirectly you can assume that company has signed, company has agreed to that document. Yes, yes, this is called common seal. Artificial person, because company is an artificial person, there is no tangible, I mean, where you can see a company, you cannot say this person is company, you cannot say, except in one person company. Okay, yes. Limited liability. Sir, in case of sole proprietorship, liability is unlimited. Very good. Partnership liability is unlimited. Company liability is limited only to the extent of share capital. Yes, share capital. Clear? Share transfer. He can, suppose the member wants to, no longer wants to be a member. Okay, he doesn't not want to be a member. He can transfer his shares to someone. Yes, stock market, you see, you have heard about stock market. Yes, when one person buys share, he will sell, another person buys his shares. It goes on. It's a cyclic process. Yes, share transfer. Then maintenance of accounts, account books. Yes, we have seen already in group 1. Yeah, company has to maintain books of accounts. Yes, to prepare financial statements. Books of accounts in the sense it starts with journal, ending with trial balance. Okay, in between you have subsidiary books also. Yes, additionally you have some other books, or I call it as registers. Okay, what is this registers? You have a separate book, say for example register of shareholders. Okay, register of members or register of shareholders, both are same. Yes, register of assets, you can say. Okay, register of charges, charge in the sense some mortgage. Okay, some mortgage, list of mortgages is called charge. Examples, I am telling some registers, you have to maintain basically some registers. Okay, and then audit, which is your 50 marks syllabus, audit of accounts. Clear? You prepare the books of accounts and the auditor will come. They'll audit the books of accounts. Okay, clear? See this? Sole proprietor, he is the owner of the business, sole owner, yes. That type of capital is called capital. Yes, we have prepared capital account. If you remember, yes, capital account. Liability is unlimited. Yes. Then in case of partnership, we have partners. We don't have a single proprietor. We have different partners. We have prepared partners capital account. If you remember, yes. Liability is unlimited. Yes. Company owners are who? Shareholders. Okay, shareholders. Capital is called share capital. Okay, you should not call it as capital, you should call it as share capital. Liability is limited to the issue price of shares. What is issue price? I'll tell you. Okay, clear till now? Any doubts? No? Very good. We have these different types of companies. I'll share this PPT later on. Okay. Different types of companies. What are these companies? Start from here. Private company. Yes. Private company. Reliance. Reliance is an example of private. Public company. You call it a PSU. Public sector undertaking. Oil India Limited is a PSU. One person company where you have only one person. Okay. One person can also form a company. Okay. One person company. Small company. Sir, what do you call it as small company? We have certain limits. Paid up capital is less than 4 crores. Turnover is less than 40 crores. That is called a small company. You need not remember the limit. I am telling you, for example, listed company. Listed in the sense, when the company is issuing its shares, that particular shares are, if the shares are listed in a stock exchange. Say for example, what are the stock exchanges? Anyone? BSE? Yes, Bombay Stock Exchange, very good. Another one? NSE, National Stock Exchange. In stock exchange, if the shares are trading, then that particular company is called listed company. Unlimited company. Sir, you told the characteristics. In the characteristics, I told liability of in case of a company is limited. But there can be companies which are formed based on unlimited liability. Okay, you can ask the shareholders to contribute from their own assets also in case repayment of debts funds are not available. Yes, in such case you can ask the shareholders to contribute from their personal assets also. Understanding? Clear till now? Company limited by shares. Company limited by guarantee. Sir, till now we have discussed only companies issuing shares, but there can be a company where there is no capital, there is only guarantee. Okay? Guarantee. Company limited by shares, company limited by guarantee. This is company limited by shares is nothing but company will issue shares and the liability will be limited. Okay? Okay? Holding company. Anyone has any idea about this holding company? What is a holding company? Yeah, indirectly holding company is nothing but company which is holding more than 50% of stake in another company. Stake is nothing but share capital. Okay, suppose a company, what do you say, Superman Limited, Batman Limited, Batman Limited is having 1 lakh shares. Superman Limited now he is holding 5 lakh shares of Batman Limited. Okay, Superman Limited is called holding company. Batman Limited is called subsidiary company. Okay, clear? Government company. Here public company need not be a PSU, but government company is a PSU. Okay, foreign company. What is a foreign company? Which is located outside India. Okay, company which is located outside India is called foreign company. Foreign company can be a subsidiary company. Foreign company can be a holding company also. Clear? Any doubts till now? Public company versus private company. In case of public company, you need minimum 7 members, or you need to say 7 shareholders. Okay, but in case of private, you need minimum just 2. Okay, 2 persons can form a partnership also, 2 persons can form a private company. Are you able to identify? Yes, 2 persons can form a partnership also, can form a private company also, but 2 persons cannot form a public company. Okay, maximum numbers in case of public company, there is no limit. It can be n number of members. Okay, but in case of private company, maximum number is restricted to 200. Clear? Earlier there was restriction with respect to paid up capital also, but this restriction has recently been withdrawn. Okay, there is no requirement of minimum capital, so I did not put it in the slide. Okay, these are the basics, huh? Private and public. Clear? 7 infinity to 200. Remember, huh? These are the financial statements a company has to prepare. What are the financial statements? You should call it a statement of P&L, not just P&L. In case of a company. Yes? Sir, in case of a partnership firm, we just call it as P&L account, P&L appropriation account. Yes? That is account. This is statement. Clear? Then balance sheet. Cash flow statement. Sir, statement of P&L and balance sheet. This is your second chapter. See the index ones. See the index ones. What is this? Statement of P&L and balance sheet. Preparation of, read. Yes. As per Schedule 3 of Companies Act. Okay. Cash flow statement. This is your chapter 3. Yes. Notes to accounts is generally you will get in all the chapters. Chapter 1, 2, 3, you will get in all the chapters. Notes to accounts is nothing but summary. You are providing some explanation to what you have recorded in the financial statements. We have discussed this in group 1. Huh? Yes? Clear? Till now any doubts? Any doubts with the company introduction? Any doubts till now? I'll give a pause for 2 minutes. If you have any doubts, you can ask. Any online students? Neha, Sanjana. No doubts? Clear till now? Yeah? Very good. This is your chapter content. See the index? Chapter 1. What all you need to understand in chapter 1? Issue of shares. Shares can be how many types? Shares are of how many types? Equity and preference shares. Sir, what is the difference between equity, preference? Okay. there is no ownership, correct. But any other difference? Any other difference? Correct. Preference. Okay, very good. While paying dividend, preference shareholders will get the priority. Yes, so they are called preference shares. Preference, they are given more preference prior to the equity shareholders. Yes, sir. Equity shareholders are only called as the owners of the company. Preference shareholders are not called as owners of the company because they are paid a fixed rate of dividend. Yes, sir. Equity shareholders, what they are paid? Are we paying any fixed amount, or there is no certainty? No certainty. Sir, if the company is making profits, yes, they will get dividend after paying preference dividend. Yes. If the company is earning huge profits, equity shareholders get huge dividend. Yes. If the company is making losses, preference shareholders will get any dividend or not? Huh? Yes, they get a dividend. Even if the company is making losses also, preference shareholders will get a fixed amount of dividend. Equity shareholders will not get anything. Okay, nothing but you can say equity shareholders are the risk bearers. You would say risk bearers. Nothing but they are taking risk. Yes, yes. So that's why they are called the owners of the company. Yes. So shares are of two types: preference shares, equity shares. Yes. So in case of share capital, what do we have? We have preference share capital, equity share capital. Sir, basically what is share capital? Raised through issue of shares. What is a liability or an asset? What is it? It is a liability or asset? Liability, right? Yes or no? Company has to pay it back. Yes. It is taking amount from someone. Similar to assume in place of shareholder, you have a bank. Yes. Bank is giving you some money. You have to pay back to the bank. Yes or no? So when you have to pay back something, that is called a liability. Yes. It is a liability for you. Share capital is a liability. Okay, so it will be on the liability side of a balance sheet. Yes or no? Agree with me? So similar to capital in case of sole proprietor, partners capital in case of partnership firm, share capital in case of company. All these three will be on the liability side. If you remember, if you could recall, yes, correct? Issue of shares is one mode of acquiring capital, one mode of raising capital. Yes. What is the other way? Issue of debentures. What is this? Sir, issue of debentures. What is debenture? Debenture. Debenture is nothing but debt capital, similar to loan. Okay. Whenever company is issuing debentures, similar to the share capital, company is also giving some certificate in case of debenture. Okay, sir, what if I invest in this debenture? What is the advantage? You will get some fixed rate of interest. What is this called? Interest. Sir, in case of shares, you will get what? Dividend. In case of debentures, you will get what? Interest. Okay. So dividend is an outflow to the company or inflow to the company? Dividend. When company is giving dividend, cash is going out of the organization or coming into the organization? Outflow. कंपनी इज गिविंग डिविडेंड ना, शेयर्स इश्यू किया है, उसको रिटर्न में क्या देना है? डिविडेंड देना है. यस और नो? यस. Why they have invested? For getting some return. Yes or no? Company will give the dividend. That is an outflow to the organization. Yes or no? Outflow is nothing but expense to the organization. Do you agree with me? Yes. In case of debentures also, company has to pay what? Interest. Sir, interest is an outflow or inflow? Outflow. Very good. Outflow. Outflow means expense to the organization. Yes or no? So the dividend paid on shares goes to which account? P&L account. Yes or no? Dividend and interest are both are expenses. Do you agree? Both goes to the P&L account. Yes or no? P&L account debit side. Agree? Remember, trading account we have expenses, direct expenses. Yes. P&L account we have indirect expenses. Yes. Salaries, wages. Yes. Overhead expenses. All these. If you could recall, yes. Recall कर पा रहे हैं ना? हाँ. Debentures. Okay. Now we are done with the issue part. Okay. Next. Company has raised the capital. Company is having the capital. Yes. What is this forfeiture of shares? Cancellation. So why do shares are get cancelled? No, not oversubscription. Say for example, company is issuing the shares. Okay. Share, say for example, 1 lakh shares. Okay. Rama Limited has issued 1 lakh shares. Okay. 1 lakh shares of rupees 10. Okay. Rama Limited. Okay. Sir, while issuing the shares, the shareholders might be asked to pay the 10 rupees at a time or pay in installments. Okay. Yes. Sir, how do the company issue shares? We have a separate process. First we will see that process, then we will come to this concept. See this process once. Kashyap, read. Issue of prospectus. Sir, what is this prospectus? Prospectus में ये सब लिखा रहता है. Sir, what does the company do? What nature of business does it have? Yes? Yes? All these points will be noted in the prospectus. Along with the prospectus, company will issue the shares. Inviting for application. Sir, if you want shares, give me this. Your application. Okay? Full subscription. Say for example, in my example, I have issued how many shares? 1 lakh shares. If I receive exactly for applications for 1 lakh shares, it is called full subscription. You can see here application received for all issued shares. Issue in the sense through prospectus. Along with prospectus, company will give an, say for example, advertisement first in the paper, in a local newspaper, in a national newspaper. Okay, suppose, and then people reading this newspaper, they want to invest in the company for, in return of what? They are expecting what? Dividend. They are expecting dividend. Dividend is similar to almost, what is it? Suppose in a bank you do some fixed deposit. Say for example, you are getting 10%. You are getting 8%. Here in dividend, say for example, you are getting 12%. You might invest in the shares, yes or no? Okay. Then under subscription. What is this under subscription? Less than 1 lakh. Sir, I have issued 1 lakh shares. Public, all the public cumulatively, I have received applications for only 80,000 shares. 20,000 is called under subscription. Clear? Over subscription. What is this? Above 1 lakh. I have issued 1 lakh shares. I received 1,20,000 applications. Okay, this is called over subscription. Clear? Clear? Now this process, I have issued the shares. I mean Rama Limited has issued the shares. Not collecting, it will not collect 10 rupees at a time. It will collect in installments. Okay, sir, what is the installments? Say for example, along with prospectus, I am inviting for application. Okay, sir, at the time of application, you pay rupees 2. How many rupees? 2 rupees. Pay just 2 rupees. Pay just 2 rupees. At the time of allotment, pay 5 rupees. Sir, what is allotment? Company will receive the applications. Yes. Company will allot the shares. Allot in the sense, will print the share certificate in his name. Yes. Once the shares are allotted, he will become the owner of the company. Okay. From next minute, he will be the owner of the company. Okay. Allotment, first call. What is this? First call. 1 rupee. Sir, what is this first call? After allotment, he is legally the owner of the company. First call in the sense, last but one installment, you can say. Okay. He need not pay, he till now paid 7 rupees. How many more rupees he need to pay? Till now he has paid how many rupees? 7 rupees. How much balance is left? 3 rupees. 1 is left. 1 in the final call. Yes, I mean short. First call. Now second and final call. I would say second and final call. How much? 2 rupees. Clear? Installments. You are asking the shareholder to pay in installments. Sir, what happens suppose if he paid 7 rupees and then he did not pay this 3 rupees? Shares will be forfeited. Sir, what is this forfeiture? You are not paying some amount which is called calls in arrears. This amount is called calls in arrears, or you would say due amount on shares. Due amount on shares. Okay. When any amount, he can pay application and he cannot pay, he may not be paying this 3 also. Say for example, he paid 2 rupees, 5, 1, 2, he did not pay anything. 8 rupees is pending. Okay. What will the company do? Company will go for, will call the board of directors. They will decide in a meeting. Okay, this number of shares are underpaid. Underpaid in the sense due amount is there. What we will do? We will forfeit these shares. This is called what? Forfeiture of shares. Forfeiture is nothing but cancellation, which Mohit has rightly said, cancellation of shares. Okay? Okay? Sir, after forfeiture, these shares are left idle, yes or no? Yes or no? So that leftover shares can be reissued again to the public. That is called reissue of shares. Forfeiture of shares, here you will get sums on reissue also. Okay? Reissue, forfeiture and reissue. Any doubts till now? No? Concept is clear till now? I am establishing the flow, okay? What does the company do? What sort of issues? Okay, everything. Clear till now? Forfeiture and reissue. Okay? Rights issue. What is this rights issue? Any idea? Hmm. Which shareholders? Existing shareholders. Exactly right. Exactly right, Kashyap, very good. Whenever the company is issuing, say for example, right now company has issued 1 lakh shares, all the shares are subscribed, everything is paid. Okay. Suppose after 10 years, Rama Limited has to issue another 1 lakh shares. Sir, why? Company is making profits, company want to diversify. Say for example, diversify. Some new branch, okay, new branch in some other state, new branch in foreign, yes. For diversifying, you need some capital, yes. So to raise a capital, they can either go for debenture capital, which is a debt, yes. Debt, in case of debt, you need to pay fixed payment, yes or no? Interest is fixed, yes. Preference shares, interest is fixed, yes. In case of equity shareholders, they don't ask you anything. If you pay, they are happy. If you don't pay, also they are happy. Yes. So, rights issue. So, whenever the company is going for subsequent issue of shares, okay, company has to give preference to the existing shareholders, not to the outsiders. Yes. So, what happens if the existing shareholder deny the offer? Yes. If they deny the offer, then go outside. But your existing shareholders, you have to give the preference. Why? Say for example, company has listed in any stock exchange. Okay. Any issue price is say 10 rupees. Now the stock price in the market is 100 rupees. How much it is? 100 rupees. If you issue directly to the public, public will definitely purchase the shares. Suppose your issue price right now is 20 rupees. Yes. Face value is 10 rupees. You are issuing at 20 rupees. Market price is how much in the stock market? 100 rupees. Outsiders will pile up. They will say, I want the shares, I want the shares, I want the shares. Yes or no? Yes or no? After reissue, I mean after this 1 lakh additional issue, total 2 lakh shares will be. 2 lakh shares will trade at the same rate 100 rupees, yes or no? Suppose if you are giving this benefit directly to the outsiders, what will happen to the already existing shareholders? They will get loss, yes or no? As a owner of the company, you should prefer me first. That is the intention of rights issue, okay? So ask them first. They will definitely subscribe 20 rupees because market price is 100. They'll make this 80 rupees profit because they have faith in your company till now. They kept faith in your company till now. So you should honor their faith by rights issue. Clear? Clear with this rights issue topic? Your existing shareholders should be offered the subsequent issue first. If they deny, then only go outside. This is called rights issue. Generally, all the rights issue are subscribed by existing shareholders only. Okay, they are denying, company has to go outside. This scenario generally will not happen. Clear? Clear till now? Any doubts till now? No? So bonus issue. What is this bonus issue? Free of cost. So bonus shares. Companies making huge profits. Okay. One way is to give dividend, more dividend. Yes. The other way is to give bonus shares. Okay. Bonus shares is nothing but your reserves get converted into share capital. You don't get any cash from shareholders, yes or no? At free of cost. You are giving shares at free of cost. Say for example, Rama Limited is having presently 1 lakh shares. You will give 50,000 shares as bonus. Say for example, for every 2 shares held by the existing shareholders, I'll give 1 new bonus share. Okay. So 1 lakh shares are held. So for every 2 shares held, in the sense, you will give how much? For every 2 shares, you are giving 1 share. So for 1 lakh shares, you will give 50,000 bonus shares. Understand? So this is way of this. I mean, equity shareholders have several privileges. They'll get this rights issue, bonus issue. Yes. Another one, we have bonus dividend also. Okay. Nothing but instead of giving normal dividend in cash, you give shares, which is called bonus dividend. Yes. Clear? Clear till now? Bonus shares issued at free of cost. Sir, rights issue, what is this? Rights issue is given to existing shareholders at a price less than the market price. Not given at free of cost. It is given at discount. What do you call it as? Discount. Sir, difference between bonus issue and right issue. Both are given to the existing shareholders only. Do you agree? But in case of rights issue, they are given at discount. Say for example, issue price is 10 rupees. In the market, stock market, the share is trading at 100 rupees. You will give the rights issue at, say for example, 20 rupees. Yes? He can buy this share at 20 rupees. He can sell in the market, in the stock market at 100 rupees. Understanding? Bonus issue, he will get some shares for free. Okay? So what is this sweat equity shares? Discount to whom? Not to shareholders, not to shareholders. That is the difference here. Sweat equity shares are nothing but the shares issued to the employees, to the directors of the company. To whom? So why it is called sweat equity? Because these employees and directors are giving this sweat to the company, yes or no? That's why it is called sweat equity shares. To recognize their effort. Yes? Company is giving sweat equity shares. Sir, what is the difference here? Same example, share is trading at 100 rupees, they'll get a discount, 20 rupees or 30 rupees. Okay? So these are given to whom? Existing shareholders. Very good. These are given to employees or directors. Who are the directors? Higher level people. Board of directors. In directors you have several directors, nominee director, dependent, independent director, executive director, several directors. Okay? Yes? Directors. Employee stock option. These are also given to employees or directors, but here what is the difference? Employee stock option is given to employees or directors after satisfying some conditions. What is the difference? After satisfying some conditions. Say for example, you need to work in the company for 4 more years, for 5 more years. After 5 years, you will get our company shares, whatever the price it is traded in the market, you need not bother, you will get company shares at, say for example, 30 rupees. Okay? So whatever the price may be after 5 years, say for example, after 5 years, the share price might be 500. This is possible, huh? Because several companies, you can see several companies, say ITC, say Reliance, their issue price is 10 rupees. Right now you can see their prices is 500, 1000, 10,000, you can see the prices. Yes? So, what is the difference between sweat equity and employee stock option? Here, the employee or the director is given an option to subscribe for the shares at a predetermined rate in the future. Only after satisfying certain conditions. Yes? Here directly they are given the equity shares, here they are given option. Okay? Clear? Employee stock option, stock purchase plan, both are same, almost same. I'll explain you the difference later on. Okay? What is this buyback? Any idea about buyback? Yes, very good. Mega, very good. Buys its own shares. Which shares? Equity or preference? Equity, yes. Not preference. Okay. Buyback in the sense, companies paying the equity share capital back to the equity shareholders and then it is taking back its own shares. Okay, buyback. Suppose some cash rich companies, what I am telling, cash rich companies, it is having huge cash. Yes, huge cash. Coal India Limited, you can see the reserves of Coal India Limited, huge reserves. Coal India Limited, have you seen this balance sheet of Coal India Limited? Have you ever seen? You as accountants, as a professionals, just try to see balance sheets of all the companies once. Okay, Coal India, Oil India, GAIL, Reliance, some private companies, you will find it in the website. Go to the Google, search Reliance, financial statements of Reliance, yes, ITC, Oil India Limited, yes, IOCL. You can see all the companies. You can see there are certain companies which don't have loans at all. They have huge reserves. Yes, whenever the company is going for a subsequent issue, people are ready to subscribe the shares. Why? Because they have huge reserves. In future, they'll get more dividend, more shares, bonus, dividend, everything. Understanding? Huh? So cash rich companies, what they do? They buy back the shares. What they do? They buy back. They don't want the share capital more, but they buy back. Okay? In case of equity shares, you call it as buyback, but in case of preference shares, you call it as redemption. What is this called? In case of debentures also, you call it as redemption. Your redemption is nothing but paying back. Okay? Preference shares you pay back, debentures you pay back, but equity shares you buy back. Understanding the difference? Yes? Clear? Underwriting of securities. Any idea about this underwriting part? Anyone? I'll explain. So see this situation here. What is this? Under subscription. You can see here, under subscription. What is this under subscription? Say for example, Rama Limited has issued 1 lakh shares. It has to receive applications of less than how much? 1 lakh. Say for example, 50,000 shares only they have received. Okay, 50,000 shares. So formation of a company is a big process. Okay, they involve, promoters has to invest huge for the formation process. They have to take all the permissions, ROC, filings, prospectus, advertisement expenses, everything, legal charges. Yes. Sir, whenever this scenario happens, under subscription can happen, yes or no? No one can guarantee that you go for the issue, you will get 1 lakh shares, definitely. No one can guarantee. Yes. A new company which is going for a subscription, for issue of shares, it may possible that under subscription can happen, yes or no? Do you agree with me? Yes, because new company, people may have faith, people may have interest, people may not have. Yes. Sir, in case of under subscription, already the promoters have incurred huge investment already. Sir, under subscription होने से कैसे जाएगा, कैसे कंपनी आगे लेके जाएगा, बिजनेस कैसे करेगा? Because they require capital of 10 lakhs. 1 lakh shares into 10 rupees, how much? 10 lakhs. They need capital of 10 lakhs. Suppose only applications are received for 50,000. How much capital they will receive? Mega, how much capital they will receive? 1 lakh shares they have issued. Only applications are received for 50,000. 50,000 into 10 rupees, how much? 5 lakhs. They need capital how much? 10 lakhs. They will receive only 5 lakhs. They cannot do the business, yes or no? Yes or no? So to avoid this situation, okay, to avoid this situation, we have several brokers in India. Okay. What are these brokers called? Underwriters. Sorry? Middlemen. No problem, tell me. Middlemen, yes. Example, brokers or middlemen, whatever you call it as, they are called as I mean, they are specialized in that. They are called as underwriters. What they are called? Sir, to avoid this situation of under subscription, company will enter into an agreement with this middleman or brokers, whatever you call, with these underwriters. Suppose if under subscription happens, you subscribe the rest. What they'll do? They will subscribe the rest. Say for example, in my example, 50,000 shares are subscribed. This is by these brokers. Clear? Sir, what will the underwriters get in return? Commission, which is called as underwriting commission. Clear? Clear? सर ओवर सब्सक्रिप्शन होने से कुछ प्रॉब्लम नहीं है. कंपनी को क्या होगा? 10 लाख 1 लाख शेयर्स इश्यू किया, 1,20,000 आ गया, 20,000 शेयर रिफंड करेगा. हैं? 1 लाख अलॉट करेगा, काम खत्म. 10 लाख से बिजनेस शुरू करेगा. फुल सब्सक्रिप्शन आ गया, प्रॉब्लम नहीं है. अंडर सब्सक्रिप्शन में प्रॉब्लम है. दैट्स व्हाई दे एंटर इनटू एन एग्रीमेंट विथ underwriters. Very good. Underwriters. In return for underwriting commission, they subscribe rest of the shares. Clear? This is called underwriting of securities. Clear? In this whole chapter, you will have only journal entries, full of journal entries. Sir, company is issuing a shares, equity shares, past journal entries. Okay. Company is issuing preference shares, past journal entries. Company is issuing debentures, past journal entries. Yes. Company has issued shares, 2 rupees on application, 5 rupees on allotment, 1 rupee on first call, 2 rupees on final, second and final call. Okay. Last 2 calls are not paid by the 100 shareholders. Forfeit the shares. Past journal entries. Okay. 100 शेयर्स जो फॉरफिट हुआ उसमें से 50 शेयर्स री इश्यू कर रहा है, पास जर्नल एंट्रीज. ओके. राइट इश्यू कर रहा है कंपनी, पास जर्नल एंट्रीज. बोनस इश्यू कर रहा है कंपनी, पास जर्नल एंट्रीज. स्वेट इक्विटी शेयर्स इश्यू कर रहा है कंपनी, पास जर्नल एंट्रीज. एम्प्लॉय स्टॉक ऑप्शंस इश्यू कर रहा है कंपनी, पास जर्नल एंट्रीज. बायबैक कर रहा है कंपनी, पास जर्नल एंट्रीज. सर कंपनी रिडीम कर रहा है प्रेफरेंस शेयर्स, पास जर्नल एंट्रीज. सर कंपनी डिबेंचर्स रिडीम कर रहा है, पेइंग बैक द कैपिटल ऑफ डिबेंचर्स, पास जर्नल एंट्रीज. सर अंडरराइटिंग ऑफ सिक्योरिटीज, पास जर्नल एंट्रीज. दिस चैप्टर इज फुल ऑफ जर्नल एंट्रीज. क्लियर? क्लियर? Need not worry if you understand first part, issue of shares, equity and preference both are same. Okay. If you follow the journal entries of first part, rest of the part will be very easy. Okay. Clear? Clear? Any doubts? Any doubts? If you have any doubts, I'll clarify. If you have any doubts, I have 5 more minutes. 6:10 पे आया था, 7:10 तक है. If you have any doubts in any of the topic, I'll clarify. No? No? Be regular to the class. You will understand the class. If you understand the class, you need not practice. I mean, you need not practice more. Okay. Be regular to the class. You will understand. Clear with these concepts? Clear with the first chapter? Overview is clear? Okay. Then we will close for today. Yeah. Thank you.